You probably already know by now that it's easier to get business loans if you have good personal credit. But how does that help you if you have damaged personal credit? Well, that's exactly what we're going to talk about during this training. We're going to talk about business financing you can get even if you have damaged personal credit. But we're also going to talk about the things you need to know to quickly improve your personal credit. Look, if you improve your personal credit, you're going to qualify for more financing at better terms. So I'm going to give you over 10 tips during this training to be able to improve your consumer credit scores quickly to be able to qualify for even more business financing. And if you stick around to the end of this training, I'm going to get you access to our step-by-step business credit building guide, because one of the easiest ways to offset damaged personal credit is to build a business credit profile and score for your business. We got a lot to cover during this training, so let's dive in. So look, if you want to get loans for your business, you don't necessarily have to have good personal credit. There's a lot of type of business loans out there offered through PayPal, Square, Stripe, cash flow financing, merchant cash advances that you can get approved for just based on the consistency of your cash flow. Or you can use an asset to serve as collateral to offset the lender's risk, and maybe it's inventory or equipment or commercial real estate, stocks, bonds, 401ks, IRAs, even account receivables where your customers pay you on terms where you can get financing that way where your consumer credit really doesn't matter either. But let me tell you something that those in those industries don't want you to know. Even though you can get approved with damaged personal credit for all of that kind of financing, your credit scores are still going to make a big difference when it comes into how much money you're going to get and the rates and terms you're going to pay. So the bottom line is, if you want to get the most money at the best terms, you have to work on improving your personal credit. That's easier said than done. Where do you start? How do you do that? Well, the way I like to think of this is by a walkthrough of how the consumer FICO score actually works. If you understand the math of the FICO score, then you understand exactly what to improve in what order to be able to get you the best results. So the largest accumulation of the credit score of FICO really has to do with your payment history. So there's 5 aspects to the FICO score. We're going to talk about all 5 today. And the biggest portion, the biggest weight into the overall FICO score is payment history. It accounts for 35% of your overall score. So knowing this, of course, what we want to do is we want to focus on 2 things. We want to focus on getting any negative payment history off that consumer credit report. Now, there's a lot of ways to do this, whether you're disputing directly with the credit bureaus or disputing directly with creditors, whether using a metro type of dispute, which is the newest strategies out there, whether you're doing it on your own or using a credit repair company. The key is that if you have inaccurate and unverifiable accounts on your credit reports, you want to dispute them, you want to get them removed. And again, a lot of ways to do this, whether you do it on your own or work with a company to do so. So you want to work on the most recent accounts first. The most recent derogatory items are the ones that you want to focus on because they have the most damage or most weight in to what's damaging your score. So find the accounts that you're paying late in the credit report, work with whether it be you or a credit repair company to work on getting anything that's inaccurate and verifiable, especially that's recent, removed from the credit report. But that's not enough. Look, I've seen a lot of people try to fix their consumer credit just by removing derogatory items. It doesn't work because you can't have a good consumer credit score without having good consumer credit. So you've got to start building positive credit as well. You've got to start getting accounts that you can pay as agreed to be able to have more accounts that you're paying on time than ones that are on there that you've paid late. So you might want to start with a cosign loan. You might want to get with secured credit cards, even if they're small limits, because the key is to add 2, 3, 4, even 5 accounts that you're paying on as agreed to offset the damage from the ones that you haven't. Now, the second largest aspect of the FICO score is utilization, and it accounts for 30% of the score. So that means 30%, almost a third of your consumer credit score is just made up of what balances you're keeping on your credit card limits or on your balances on loans and credit cards in relation to the limits. So a lot of things to dive into here. First of all, one of the easiest ways to quickly improve your consumer credit scores is to call your existing credit card issuers and ask them to raise your limits. As a matter of fact, this is something I do every 6 months. Now, I don't let them do this if they're going to put an inquiry on my consumer credit reports. So I ask them up front, look, I'm interested in you raising my credit limits, but I'm not interested in you doing this if it requires a credit check and a hard inquiry on my credit report. If you can do a soft inquiry, which doesn't show my credit credit report, or you can do an internal review without putting that inquiry on my credit report. That's a hard inquiry that other lenders and credit issuers can see that I'm interested. And 3 out of 4 times, they're able to do that. They do a review, and oftentimes they'll raise my limits, and that immediately gives me more utilization. It improves my utilization, it gives me more available credit, and raises my credit scores. Now, the other thing you can do here is to add credit cards with available credit to your credit report. Now, if you go and know somebody, it's a family member, for example, or a friend that will let you come on as an authorized user to an account they already have that has a really high limit, that can result in a substantial increase to your credit score. So if my credit's damaged, for example, I can go to my dad who has good credit, and I can say, Dad, add me as an authorized user to your credit card. The minute he does that, now I'm added to a $10,000, $20,000, $30,000 limit credit card. All of a sudden, all of this available credit is now getting credited on my FICO score, and I can see a significant improvement, significant boost. Now, you can also come in and get secured or unsecured credit cards, even with $500 or thousands of dollars of limits, and that's going to help here as well. The key is to make sure that you have available on your credit reports. The more you have, the better your scores are going to be. One other thing that's very important here. A lot of people think that utilization is just on revolving accounts, and it's not. It has to do with all accounts on your business credit reports, even including loans. This is exactly why if you ever go to get a mortgage or a car loan, you're going to lower your credit score sometimes pretty substantially, and it's going to stay low for 6 to 12 months. Because if I go to get a car loan for $20,000, well, now my credit report reflects that I have a loan for 20 grand and I owe 20 grand. So because that's adversely affected my utilization, it'll lower my scores. So because of this, if you're going to make a big move that you need to use your credit scores for, you really want to stay away from applying for credit card or applying for loans, such as car loans or mortgages, because that will lower your score for upwards sometimes of 6 months to a year. Now, the third largest aspect of the FICO score is how long we've had credit for. And there's only one thing we can do to improve this aspect of the score, and that's get added to somebody else's account as an authorized user that's had credit longer. So again, back to that example of my dad. If I go back to my dad and I say, Dad, can I get added as an authorized user to your credit card? Well, first of all, I can't use that credit card unless he physically gives me one to use. So I can't damage him in any way. It only helps me because I'm now getting credit for his payment history on that credit card. I'm getting credit for his payment history. I'm getting credit for his available credit on that credit card. And I'm getting credit for how long he's had that credit card open for. That's why that one move of getting added as an authorized user can make such a significant improvement to your credit score because it helps in all 3 of those areas. Now, if he's had a credit card open for a year, 5 years, 10 years, that can really help this aspect of my score. Now, when we look at length of credit history, they're looking at the average age of all accounts that report to our consumer credit reporting agencies, and they're also looking at the age of the longest account we've ever had open. So if you're getting added as an authorized user to somebody else's credit card, try to find the longest standing credit card that they have, especially, hopefully, one with the largest limit, and of course, one that's paid as agreed. And if you get added as an authorized user, that can really help that aspect of your score. Now, the next aspect of FICO score has to do with your credit mix. And the credit mix is basically the mix of credit card or total overall credit that you have. So FICO wants you to have 3 major credit cards, Visa, MasterCard, Amex kind of credit cards. They want you to have 1 to 2 car loans, 1 to 2 mortgages, and 1 to 2 other kind of loans, what we call like oftentimes signature loans. So if you get a car loan, get a mortgage, get 3 credit cards, that's a perfect mix for FICO, and they're going to max out this aspect of the score. But if you only have credit cards and you don't have a home loan or you don't have a car loan, then you're going to damage or adversely affect this aspect of your credit mix. So the key here is to get a car loan when you can qualify, get a mortgage when you can qualify, but also manage the credit cards that you have. Don't have more than 3 major credit cards. You know, if you only have 1 or 2, get a third because that magic number is 3 major credit cards with FICO, and of course, work on getting the mortgage and the auto loan as well. The last aspect of FICO is inquiries, and a lot of people pay more attention to this aspect than they should because it only accounts for 10% of your overall FICO score. Now, inquiries can hurt you if you're applying for a bunch of credit and getting denied. Actually, inquiries don't hurt you when you inquire to get credit or financing. It's groupings of inquiries that can. So FICO doesn't want to see you're going out to get 5 or 10 credit cards at the same time. So if you're applying for 5 or 10 credit cards, it can adversely affect this aspect of your score. Now, all auto loans or mortgage loan inquiries only count as 1 into the FICO score if they're over a 30-day time period. So if I'm shopping around for the right mortgage broker and 5 of them pull my credit, it only counts as 1 inquiry if those 5 are pulling my credit within a 30-day time period. If I go to a car dealership and they send my application application to 7 lenders, it only counts as 1 inquiry if that's done within a 30-day time period. But it will adversely affect me if I'm putting inquiries on my consumer credit report that don't result in actual financing. So if I'm putting an inquiry and I get denied, and I go to inquire for another credit card and get denied, the more those build, now I have all these groupings of inquiries, and I also have nothing that's showing on my credit report that actually got approved from all those inquiries. That can adversely affect our credit, my credit as well. So take a look at your credit report. If there's inquiries you don't recognize, then work with a credit repair company or you yourself to be able to improve that and dispute with the credit bureaus or creditors, telling them that you don't recognize that inquiry. You don't want to do this if the inquiry really is yours, especially if it results in real credit. There's all kinds of repercussions for doing so. If there's inquiries that you don't recognize, then work with the bureaus and credit issuers to get those removed. And keep in mind, you really want to focus on only trying to ever apply for credit you can get. And I provide a lot of training to teach you what you can and can't qualify for. So you're only really working on applying for what you can get. That's going to maximize that inquiries aspect to your credit report. Look, if you follow these tips, this is what's going to help you quickly improve your consumer credit. You also want to focus on building your business credit. Because if you're a business owner and you're trying to get financing for your business, even if you're working on improving your personal credit, you could be building your business credit at the same time. So even though this might be a negative factor to your approval, the strong business credit profile is a compensating factor for this. It kind of compensates for your damaged consumer credit. So if you'd like to build your business credit, grab our free guide at creditsuite.com/EIN. That's creditsuite.com/EIN, and give us a call for a free consultation. On a consultation call, we'll get your credit reports from the business credit reporting agencies for free, saves you $250. We'll go over those with you, give you tips and tactics to improve your business credit. We'll do a fundability assessment, help you fix other aspects of your fundability that lenders and credit issuers look at. Again, we call this compensating factors. If your consumer credit's damaged, well then let's structure your business and set it up where it's appealing to lenders. Let's build that business credit report that gives you more compensating factors to compensate for the damaged personal credit. And on this consultation, we'll also do a funding qualification. We'll tell you all the loans and credit lines you can get right now. A lot of entrepreneurs can qualify and don't even think they qualify. That could be you. So give us a call for your free consultation at 877-600-2487. That's 877-600-2487, or email us info@creditsuite.com, or schedule your consult online at creditsuite.com/consult. Don't forget to grab our free business credit building guide, as I mentioned, at creditsuite.com/EIN. And if you got value from this training, make sure you like and subscribe. And I look forward to seeing you on our next training, where we talk about more cool ways to get money to start and grow your business.